It's time for the morning trade, and we're focused on Meta platforms. So big news here. Mark Zuckerberg announcing the company is currently building a 5-gigawatt data center to support Meta's AI lab. Marley Kayden, Schwab Network contributor, joining me right now to look at some of the reaction and the details of this news.
Yeah, Mark Zuckerberg, like you said, Nicole, and good morning to you, announced that they are building several new multi-gigawatt data centers, one of which will be called Hyperion. Now, that will power the new superintelligence lab. Another one, which is called Prometheus, Zuckerberg saying on his post on Threads that should be online as early as next year. So this is a major development for them. Also building multiple additional Titan clusters as well. For some perspective for you, size-wise, each one of these covers a significant footprint of most of Manhattan, which is where you are. So think about that for size scale. And each one of these could power 4 million homes. So we are talking about incredible computational power as well. The street right now, as we look at the shares, down about 0.6%. But on this news, B of A did raise Meta's price target. So analysts responding positively to this. B of A raised the price target on Meta to $7.75, up from $7.65. In response to that post about the data centers on Threads. B of A saying they view those comments as a sign of confidence in Meta's revenue trajectory. They also added that the advertising channel checks show improving ad spend since April. B of A increased its revenue estimates to reflect an improved macro environment as well, and those ad improvements, and cited higher growth from Meta's AI-driven ad improvements for that target bump. Now, there is another piece here, too, that could also be affecting Meta shares right now. The New York Times is reporting that Meta's newly formed superintelligence lab, which will be powered by one of those multi-gigawatt data centers that they're building out, is discussing a potential major strategy change for them, which would include taking their open AI model closed. Traditionally, their model, which is called Behemoth right now, has been an open model, meaning that its code is open to the public. And that's been a big thing that Meta has stood for, saying that it's better to do things out in the open. Apparently, there were some closed-door discussions with the new head of the Super Lab, Alexander Wang, about the possibility of taking their model into a new model and making it a closed AI model. So that would mark a major shift and also a move away from this Behemoth model that they've been working on long term. They're in the report from the New York Times. They did say that Behemoth has finished its training, but they delayed the release because of poor internal performance. So certainly a possibility. It does say the discussions are preliminary. No potential decisions have been made. But, Nicole, this would mark a major both philosophical and technical change at Meta. So could potentially be a major shakeup if these rumors are, in fact, true, and if Meta chooses to act on them.
Look, I mean, the big picture here is these Mag 7 names continue to wow Wall Street. At first, when they started to make those AI investments, people were balking during the quarterly report saying, what? Oh, my gosh, they're going to invest how much in AI? And look at how it's coming to fruition, and more. Even more so as you're reporting here today with this AI data center. A final quick thought on this group.
You know, it's really interesting to think about this particular scenario that the Times is reporting on, because this move would make them in a very different position in this AI race that I think they're a little behind in terms of the conversation, but certainly a move they're trying to keep up with rivals like Google and OpenAI and Anthropic. So going into a closed model would certainly be an interesting move on their part, as the others do believe in this OpenAI policy.
All right, Marley Kayden, thank you so much. Great to see you. Really appreciate it. Meta at 7:16 today, and we're going to trade it next. We bring in Tim Biggam, options strategist at Buy Alerts. Thank you so much for being with us. You have an example trade for us for Meta today, right? Can you tell us a little bit about that?
Yeah, absolutely, Nicole. And as you and Jeff alluded to in the first segment there, stocks making new highs, Meta not being one of them, certainly today. So the stock struggling even after that, and I call it a slight upgrade by B of A, certainly going from 750 to 770, not a big deal overall here. But I think Meta, like many of the other names, running into kind of this yin and yang between rich valuations, no question about it. Price to sales here now over 11 times. PE pushing towards 30. Both of these at 5-year highs almost. So we have these high valuations. Certainly growth, as you alluded to, coming to fruition with AI, but they have to spend big time to kind of buy that growth here. So I think just given the fact that this market has, continued to kind of creep higher here, I'm just looking for a leveling off as we get past kind of a seasonally bullish period here. So I'm taking advantage of some high implied volatility in Meta before earnings at the end of the month, going out to the July 25th expiration, selling an iron condor, selling the 750, 755 call spread, and at the same time, the 700, 695 put spread, plenty of room on both sides here, collecting about $2. So really like the kind of risk return on this, risking $3 max to make two, and having plenty of cushion on a stock that I think will probably continue because of earnings as well to trade sideways here. Valuations rich, that 10-year yield, as you talked about, poking towards 4.5% again, which should, I think, temper some of the rally in these big momentum mega cap names here. So we shall see. But similar last week we did in kind of Amazon, just looking for kind of a consolidation period on many of these names.
Tell me more about the big picture here on the market action. You mentioned my conversation with Jeff Pierce earlier. What stands out to you here? How do you feel about the week ahead, the earnings, as we're hitting records today for the NASDAQ and the S&P?
Yeah, absolutely. And the NASDAQ and the S&P, remember, are really overweighted by NVIDIA and Microsoft for sure. Those two big names accounting for such a large overall percentage of the weighting. So those continue to head higher. We have the good news on NVIDIA coming out as far as the chip sales being allowed here. But at some point, valuations do matter, in my opinion. Maybe I'm old-fashioned there. Plus, interest rates matter with valuation. So with today's CPI number not being as dovish as many had hoped, right? I don't think it was absolutely a bearish number, but I think that's why you're seeing that 10-year yield heading towards 4.5%. If it breaks past there with conviction, that should certainly put a little bit of a damper in this kind of, not even it's a mini melt up to say the least, sort of rally in stocks here. So seasonality ends at the end of July. So once we get into August, September, kind of halfway through earnings season, we'll see where this market really wants to head.
Okay, good to see you. Tim Biggam, option strategist at BioAlerts. Thank you so much. Great to see you.